juice to go up, and it's not right now for all the reasons he just spoke about. So we're up a dime. It's still bullish here, but a dime is nothing to me. It's flat. So we're gonna chill at the open. As always, let's look at our opens here. Everything's fine, but I'll run through them real quick. CSX, we're looking to leg into a covered call. We'll probably do that today. Our Intel put spread fine. Our VIX fine. It's flat. We're not in PM, but I told you I was going to watch it today. And it's up a little bit. So that could be a 30-minute high play. I wish it had more juice for a put spread. It just doesn't, but we'll take a look at it. XRT fine. XLE fine. We have a covered call. Cake fine. Intuit's going to expire worthless today if you're still in it. Visa, we're looking to leg into a covered call for next week. Wells Fargo, fine. Google, we've met our target in the weekly, and in the monthly, it's just going to expire worthless. And I'd love, this is on my watch list on a pullback as another go-to for selling weekly put spreads. This support down here, it just is fantastic. Monster double bottom. This was the earnings gap down, built a base of support. This tail was dicey that day. It's another breakdown. And this was the day we entered the put spread. It's a no-brainer setup. But we need a pullback, and we're going to do it again. Red Hat will expire worthless today. XOP put spread fine. Amazon, if you're still in it. Otherwise, I think we met target. I think I said try to close it at a nickel. Win down a little bit, but totally fine. And when Greg was looking at gold, I pulled up this GDXJ. This is a great put selling candidate, but there's just no juice in it now. But we can still keep an eye on it for maybe a different type of trade. Let's look at some gapping stocks now. VIPS is actually after the market today, but I just pulled it up anyway. It's a bearish pattern right now, declining 20-50, sell setup, engulfing bar, but I'm not going to trade it today. Now, RBS, the reason I missed this as a gapping stock yesterday, but the reason I'm showing it to you now is because when I was reading the Wall Street Journal this morning, there was on the front page, you just had the little snippet summaries. I didn't read the article, but the snippet summary said they settled with the U.S. SEC, I guess, in the United States for $4.5 billion over the toxic mortgage business. So if it's in today's newspaper, what does that mean? It means the news was out yesterday, right? So look at what this stock did. So I'm kind of just, since we have time, not a lot of earnings. So I'm just giving you a trading news lesson. Right, that's correct, Dan, but here's my true question. Why is that a bullish gap, bullish day breakout when they just had to pay $4.5 billion? That's the question. So you all think about it and answer it for me. That's correct. Gordon's correct, but let me just add a tad bit to Gordon's answer. The answer is yes. I mean, just because the news is out, but the precise answer is because the actual news was better than what the market was perceiving it could be. Therefore, the chart acts favorably. So it's the reaction to news that is more important than the news itself. And that's how we trade news. A stock that does not go down on bearish news is bullish, and vice versa. A stock that does not go up on good news is bearish. Okay, so that was a good little news example. DBX, this is our new IPO, Dropbox. Well, it's 3182. It was worse off this morning, so I had it on a gap down list. Or wait, yeah, 3182. But I want to start watching this because it has good option premium. And if it was gapping down, I was thinking this might be an iron condor play. But now that it's, popping a little bit here, we'll see. Well, in 30 minutes, maybe we can sell a $29 put. We'll watch it. Mosey. 218. So it's off my chart here. Look, here's 210. So I got to go to my weekly. So it's extended. But when I see monthlies like this, look, I don't even know what Mosey does. And nor do I care, other than knowing what sector it's in. And, I don't want to trade bios. But this has been in a coma. Look at this volume. Wow. So it was a green month, but it still couldn't go anywhere. Here's another big green one. Ended with a topping tail. But maybe it's going to come out of this coma. It's a death trend. So I'm going to watch Mosey in 30 minutes. Spiner, we don't need that. It's flat. Try. Sloppy. Look at it slopping around here. 38 bucks. So it is gapping down. So we'll keep that on our bearish list. Redfin. Gapping down, but in this consolidation. I have no idea how to trade that. This one I like. This one, bullish, sloppy consolidation. I got now converging 20 and 50, gapping up to 860. So percent-wise, it's a little excessive, but I like the weekly and monthly. So 860. Well, yeah, my target's not great. A better entry would have been down here at, $6. Whatever, we'll watch it. AL, nothing. I can't tell what it's doing, and it's, extended. I have nothing. Our Symantec that we talked about, look at that. And I posted a chart in our Facebook group just showing SYMC and TTD with the expected moves. And the people who sold options on these two that, that say, hey, 90%, whatever, the mathematical people that say, oh, you're going to win X% of the time based on my testing and whatever. So just sell options into earnings. So on these two examples, those type of people are getting absolutely smoked. Here, I'll I'll give you the expected moves. On SYMC, which is this one, the expected move was $1.92. And look at this gap down. They're getting smoked. TTD, expected move was $5.06. And they're getting smoked. So just an FYI, that's why we choose 97, 8% of the time not to trade into earnings unless it's a core trade and we don't mind being assigned the stock. So what can we do on this one? 68 bucks. It's off the charts on every time frame. There's nothing for me to do with TTD unless it sets up a bearish intraday pattern, maybe 30-minute low, and we can short and out of the money call that expires today. Look at NVIDIA. So remember I said yesterday, if it gapped up 20 bucks, I'd be selling it. Now it's gapping down 5 bucks. This is what we call a bear gap surprise. I look at pre-market activity. Look, it cannot get over 256 pre-market. There's sellers there. So this is, I like this one. This is a tier 1 possible bear call credit spread, maybe 10-minute low. I don't know. We got to watch it, provided it doesn't get through 256. I'm going to check the premiums now. Yeah, Thomas said, G. I mean, the daily is 100% fine. If you know, if that's 100% fine. 15-minute charts extended, so a retracement is totally expected. And some people got, you know, we recommended closing out at 35 cents yesterday. I don't know if people got filled or not. So in the video here, just for the fun of it, I'm going to see what the premiums are now, because then we're going to see how much they deflate. So check this out, the 260s right now, way up here, are 73 cents. So that will be the one that I sell if I get a setup. And right now, I don't have a setup. Look, it's 9:31. So less than 2 minutes of market open, and buyers are engulfing, close to engulfing this pre-market activity. So I'm going to leave it in a window, and I'm going to continue moving on. There's nothing, it's not, it's, I've just got to watch it. Spiders here. Now this could be a beautiful 30-minute low, selling a 272.50 naked call. I see the Q's gap down, little topping tail on the 5-minute chart. Spiders now accelerating a little bit. And it just depends how aggressive you want to be on your entry. All right, I just got filled on something. So the 272.50s right now, spiders are 34 cents. That ain't bad, 340 bucks for calling a short-term top, but it's only 932. I'm not doing it right now, but it's setting up for that trade. Diamonds, see right here, it's just a small little doji bar. This is not a short setup. It's not. And it's holding. IWM, that's more bearish. See, rally to resistance, topping tail, taken out, you know, its 2-minute low. This would also be a candidate for selling a bear call spread or just naked. I do them naked when there's no overnight gap risk. But IWM, let's see what we can get for the 160. I like that one actually better than the spiders. You're only getting 14 cents. But I like the pattern better. And, you know, it's a cheaper stock. So 14 cents on 160 as opposed to, you know, 34 cents for the 272.50. And as of the daily right now, that's still a bullish pattern. I have no topping tail. I have no shakeout. It's still in an uptrend on the 15 and hourly.
Guys, wow. Guys, Dan, give me a second here. Our stock from yesterday, NTR, place a buy stop at 49.42.
What symbol?
NTR. I'm going to give it a $1 stop under yesterday's low, and we'll see what it does. Place a limit at 49.42. It gets a little spready. It was an 8-cent spread before.
And I just looked at options for NTR that expired today. The 49 puts are 5 cents by 70. That's nuts. But that would have been a fantastic day trade also. If I could have got 20 cents, $200 just for, saying it's not gonna, it's gonna close above 49 today. And Greg, you're okay. Yeah, I wrote these in that you mentioned yesterday. So your EPD, that's a beautiful 1, 2, 3 if it closes here. It's way too spready, the options. TRP, Greg mentioned. QEP, still looking good.
It's okay to leave the bid in. You can leave the order in if it pulls back in, but we're not chasing it up.
All right, NVIDIA, no play. Spider, see, I was telling you what was in my head, but it's not working out. So no trade for me. Same with IWM. Q's actually.
BNL, another one. Same thing we went over yesterday. Let's do it above 35.30.
Hey, Greg, if you don't mind typing the symbols for, both them and me.
Yeah, well, I will, but I'm
Okay.
placing orders as well.
Yeah, I got it. Yeah, because I miss it sometimes, many times. SYMC, look at this dog. Oh my God, look at that weekly, monthly bar. And I think the news was they were talking about accounting issues. That's like the kiss of death is, when I trade news and I teach, I have a whole module and old DVD on news. Do not, that's my disclaimer. I don't trade BIOS and I don't trade anything having to do with accounting irregularities. And this is exhibit A of that. NVIDIA is still sloshing around. I mean, if it after this sloshing, if it takes out a 30-minute low, then I'll have a red bar and a topping tail, and then I'll do it. But Spider's here acting well. Looking at our positions here. Okay, Visa is red, but I had an alert in to sell the calls. So see, that hit. See, I said under a prior bar's low, we're going to sell the out of the money 133 calls. So that triggered if you're in the stock.
Did you guys hear that? I'm trying to figure out different computers and which one sounds to come out of or not.
No, I didn't hear anything.
All right, so I have to find out if I can mute just like when you're talking or I'm talking on one computer without muting the whole thing.
So that's how we leg into covered calls right there. Google and Amazon down $5, but our short strikes are so far out of the money. And this win is selling off, but I remember yesterday we covered half for like 80% of max gain, and then I moved the stop under yesterday's low. So that's a guaranteed winner. So there's nothing to do. Just let it do its thing. Let it play out right now. Hey, Greg, when you free up, look at this BMY. I think we should scan some drug manufacturers since Trump's going after their pricings. And Bristol Myers, I don't, they're diversified, of course, but, they also make some drugs. But I like this W formation now after a new low. This would be an awesome 50-minute, 50 strike put candidate. The Junes are juicy, but let me check earnings, and that's a long, way away for a bottoming pattern is the problem. But yeah, we're fine on earnings July 15, but your stop's under here, so you just let it play out. I'm going to watch that. That doesn't look bad at all. Look at NVIDIA here. I'm watching on my other computer. Look, remember I said 30-minute low? This engulfing is now failing at 941. Now let me see what these 260s are.
Qs are coming in pretty good here.
Yeah, so I forget what they were this morning, but now they're like 43 cents. That ain't bad at all, particularly with the Qs coming in. I'm going to give it a few more minutes here, but then I like that. And then stop is the pre-market highs, and you just put your stop in and you just move on. And then trail stops, of course, if it continues to retrace. And if what is Dan roll up on what? I'm 10 stocks ago. Yep, Q's coming in. Yeah, I'm going to start nibbling on this on the short calls here. 38 cents. Nope, he didn't fill me. He posted me. So now it's 35.38. I'll just leave it there, but it looks good now. So it took us 12 minutes for it to set up NVIDIA. I'm still on the offer. 35.38. There, it just got filled. Stop over the high. Roll up. I think it was V. Roll up. I don't understand your question. All we did was sell a call for next week against our long stock. That's all we did. There's no rolling involved. XLE we had to roll, and I did that yesterday because there was no time premium left in the money call, so there was nothing to squeeze out. So I rolled it to next week where we got new juice. We got new juice. You like that? New juice? All right, see, just because we're in the green room, that's how we can, play some of these stocks. If it continues to fall, then even for our weekly options trader, it might be hard to get on board. This PM is doing nothing. BMY looking great. I mean, I love the new low, W bottom. Oh, FTR, Dan. No, I mean a day trade maybe, but nah, I don't like the gap. We're in the short puts, but for a new trade, I think we can find a lot better. I mean, again, if you want to trade this 15-minute chart for a day trade, I could see it, but I don't like this unfilled gap, deep retracement. We can find better. Verizon, it's a gap up. I don't see anything compelling. I mean, it's a bullish gap. It's a bullish morning, but you got no price void. It's extended on the 15, 60-minute. Nah, that ain't, there's just, what you all should do also is in your trading plan, when you have your favorite patterns, like this is what I'm looking for. And, well, spiders are holding. And, when we had the lab, that's what we did. I made people have pictures of the patterns we're looking for. And you know how I get, using analogies, and I make things sink in. Do you remember, if you're old like I am, 54, do you remember as a kid, your parents might have bought you animals to help you match the shirt in the shorts? So you match up the dinosaur with the dinosaur and the dolphin with the dolphin, and they match. And that's what I made. That's what I told these students. I said, look, when they asked me, hey, Dan, can I trade Verizon? I would tell them, pull out your animals and show me in your trading plan what picture this is. And then, after 50 times, I would say, stop showing me shit unless you can show me the animal picture that you're trading. Is it a breakout failure? Is it just a vanilla breakout? Is it a mortgage play? Is it whatever? It's whatever's in your trading plan. And, just that silly analogy, it's sunk in with them. It's like, don't go into hope mode and say, hey, bullish gap here in Verizon, I'm not picking on you, XYZ. And I say, fine, but show me the pattern. That is your animal picture. VIPs, is that one earnings tonight? Yeah, that's earnings tonight. But it looks like a day trade short. Hemant, no, we don't. We don't, just because, it's too, the brick and mortar, it's too cost intensive, and, running an office and computers and this and that. But Greg and I have been brainstorming maybe having a, what's the word, Greg? Some type of, platinum 3-day thing. Yeah, it could be online too. Yeah, I mean, online. Yeah, we could do a 3-day workshop online, or we could possibly rent a hotel room in South Miami, South Florida somewhere, and do a nice executive 3-day thing. So we're kicking around some ideas. NVIDIA, no, I'm in a small lot, but no. That's why I didn't make anything official. I only did a 3-lot, baby size, and stop the high. John, if you're away from the computer, working or golfing or boating, then you just put it in your, you put a contingent order, buy to close market order, and you go golfing. Otherwise, if you're in front of the computer, then you set an alarm before the stop hits. You set what is an alarm? It's when you want to be notified of something. So pick on the chart a level in which you want to be notified in advance. So, if this were bullish here, you could eyeball it, set an alarm at 199, which triggered, and then you would assess it. Yeah, it's still fine. So now I'm going to set a new alarm at 198. And I'm also going to set an alarm at 202. And that will help me reassess. Yeah, well, Dan, XLK, we sold yesterday. We sold, you know, we sold it. So I'm not sure. Yeah, I did it both in Telegram and Greg did it in the green room. But even, but your trading plan should also know what to do, even if you do miss it, or even if we don't say anything. So what time frame were you trading? What does your trading plan say about trailing pivots? Um, I'm not sure how to enter the order. John, a contingent order? Is that what you mean? What software do you have? Because I actually did a recording, which I can dig up. All right, Qs are weaker, so that favors day trade shorts only for NASDAQ. So yeah, if it's on, well, regardless of your platform, if you don't know how to work a contingent order or what it means, yeah, I can tell me during the slow time. I'll dig up that recording I did, and then then you'll understand what a contingent order based on the stock is, and then you just have to go to your Fidelity software and either figure it out in the order, management section, or call them up, have them walk you through it. Say, please walk me through how to make an option trade contingent order based upon the stock price. Look at IYT ripping here, the transports. Wow. Now they've been lagging the other markets, of course. They haven't come, hit this prior high, but this weekly is another major support over time. So this would be a great, in fact, on this green day right here, see that green day on May 8th, I was looking to sell an out of the money put spread then. But IYT is just too spreading. Greg, what about your Zen? Do you did we? Let me see if I gave him a new stop for the back half.
Nothing to do with it right now, Dan.
Well, I'm just asking you about a new stop. Is all. The current.
I sold that yesterday.
Right, but I have it in the letter. So I currently told him, we're out of half, and I told him to trail a prior day's low. So it's there.
Have them sell it. Sell it.
Okay. You got it.
Things are pretty Mr. Schizo hanging around here this morning. That's normal after the run. Buyers don't give up so fast. So it gets choppy, and even looking at the Qs, while there's a little bit of weakness, possible double top on the 15-minute, it hasn't confirmed and rolled over yet. I'm looking at VIPs for a day trade short. It's retracing back up to yesterday's close and today's open, which is about 1417-ish. Daily's in a downtrend, down a couple of days already, but all time frames intraday are lower. So let's say 1570. Even if I give it, I got to give it 50, 60 cents here. 1060. Yeah, 50 cents stop. I'm going to do it right here at 1510. I could stop it above today's high, but then I don't want to see it go above today's high. But that might be too tight. Let's see what I'm going to have to do here. I'm going to get a better, I have to do this now. Okay.
Look at that TTD. So it was an excessive gap, but here's pre-market. I'm sorry, actually post-market yesterday. Look at that, basing at the high into, I guess, 8 p.m. It's when the ECN shut down. Gap up from this, strong pre-market and just ripping again to new all-time highs. Look at the weekly, monthly. I mean, shorts are just getting slammed. No easy place to go long, though. And SYMC, the other one. Well, it has a bottoming tail. So at least, I mean, it's still in a downtrend on using the pre-market data. But, the fact that it has a tail here, that's this 2-bar reversal on the 15-minute chart. But still no pattern for me. I mean, possibly if it went up and made a double bottom, I'll bet the puts are off the charts. Wow, this NVIDIA might stop me out. I'm glad I told you all to hold off. Now I shorted the 260, so could I give it more room? Absolutely I could. But then my pain is going to be greater if this keeps going. So my stop is, I just did it 256.22. I have a buy to close market order, and I'm just going to stop out. BMY is coming in. Well, yeah, the bulls aren't giving up, and I still have my June put spreads on the spiders. I took profits, as I told you, on some of my Mondays and next Fridays, looking to reload. But this right now, it's 30 minutes into the day, and my bias is higher for the day. We look great on the spiders, even though they're extended for a day trade. It reversed that little morning. Could you roll up those puts? Sure, you could. And so then you just, It's the same thing. I mean, you would only roll up to get more bullish. So the question is, do you want to get more bullish? 1, 2, 3, 4, 5, 6, 7 green bars. I can't answer that for you. So all I can answer is rolling up will get you a little more credit, but just bear in mind you're increasing your deltas, so you're getting more bullish, and that's up to you. That's up to you. We do look higher, but it says, Greg and I said pre-market, is this an ideal time to start taking on new longs? And it's not a no-brainer. We like to jump on at the no-brainer entries. It's tougher now. But somebody asked me the other day about the difference between offensive and defensive rolling. That would be an example, if you did it, of an offensive roll, because offensive means you're getting more bullish or more bearish on an existing position. Defensive means, hey, this thing's not working as right. I'm going to pay a little. I'm going to roll it down to give me a little bit more cushion. Just scanning all our positions. Everything is totally fine. TSX is another one, remember, folks, that I'm looking to leg into a covered call. And I came close to doing it into the close yesterday based upon the overbought market. And I said, no, remember I said this doji is not a bearish hanging man. It was a consolidation and a strong breakout. So we're still long stock on CSX only, meaning no covered call. But I'm short the put spread myself. This said G, since it's a little bit spready, let me see if I can play market maker and try to sell some puts at price improvement. Okay, right now on my NVIDIA, I'm down unrealized. I'm down $100 on a 3-lot, but this is an example of time decay tick-tock into the close. That premium, it's 260 strike. As long as, the premium's going to decay into 4 p.m. And that's my point. So let's say this hits my stop at 3 p.m. Okay. I will still stop out at a gain because there's only 1 hour left. Who would buy a 260 call stock at 256 with 1 hour to close, unless you're just going for a home run? But they're going to be extremely cheap, like 5 cents. And so if I stopped out at 3 p.m., I'm stopping out at a gain. If I stop out in the next hour, it's going to be at a small loss. All right, said G. The 55s are 50 by 60. Wow, we sold that for 70, the spread yesterday. That was a nice trade. Yeah, Sosnoff. Yeah, but he doesn't read charts. We've talked about it, and so he just does everything mechanically. Meaning, if it's going against me, then I'm going to roll it further away. But then rolling it further away costs money. It's not a gift, so it's still going to. You're still fighting a losing position. Now, another thing I could do on this in the video. It's 10:06. Let's say I stop out at the 10:30 reversal. I could also sell an out of the money put now as a day trade if I got juice down here and then put the stop the low of the day. But then the only disadvantage of that, when you get too complicated on some of these adjustments, you can actually get banged around on both sides. I could stop out on my short call and then an hour later get stopped out on my short put. So again, the pattern has to support it. Don't just start throwing crap against the wall because it's going against you. So on the June spiders, Dan, I'm short the 258s way down here. I'm short these 258, and then I bought way out of the money 238s. So I got a $20 wide up very nicely on it. And so you were asking the question. Here, I'm going to do it for you, hypothetically. Let's say we were to roll those 258 puts. So I'm buying to close. And then simultaneously selling to open. How high up do you want to go? Maybe move them to 262s. Maybe to 260. Let's roll them to 265 and see what I get. The midpoint is 89 cents, Dan. So if I were to close my 258s and roll them higher to 265, take in 89 cents a share, but I now have $7 less cushion. So I can't tell you if that's right or wrong, but I'm teaching you how to do it based on your expectations of the stock. I'm not going to do it because I still think we're getting short-term overbought, but I'm going to leave my position open. I like my position. If I were to close it right now, let me see what buy to close on mine is 66 cents. So I'm already at 50% of max value in 3 days. So does that make sense? Instead of rolling them higher, I'm going to challenge you with a different thought. You're suggesting, hey, I want to get more bullish. And I'm sitting here saying, should I take half profits? Which is the exact opposite of getting more bullish. Yeah. So, but I might into the close. I'm not going to do it now. Well, Dan, I would say I mean, I don't use the word always, in trading, but I would just caveat that and say, yes, it makes sense to take 50% if you're getting a rapid gain. And I have 36 days to expiration, and I just made 50% in 3 days. So that's the difference. But, well, you know what? Here's what I'm going to do. The midpoint to close, like I just said, let me load it up here. It's 65 cents a share. I'm going to, now it's 64. We look great. I'm going to bid 50 cents a share and see if I can get filled into some rally into the close. So by having an order out there, I have nothing to lose. But this 15-minute chart is still fully bullish. So I think in our advisory letter we have different strikes. I think theirs is $10 wide, but I went out $20 wide because I didn't care about the extra capital consumption and I wanted a bigger credit. And that, remember, you all heard me saying, hey, do what, I gave you a couple of them, but I said, do whatever, strike an expiration you want out of the money, depending on how much cushion, and just go to town. Like, I did four different positions. Oh, I did give them the June 260, 240. So the 260, 240 is $1.31. Okay, they are, wow, that's strange. Okay, because they had different ones. So there we sold it for $1.75. So I'm just going to tighten the stop there. $265.14. So since, the longer days to expiration, I give those more wiggle room than I do the shorter ones, because in the shorter ones, I don't, want them to go against me. My profit evaporate. All right, Mike, yeah, 1 second. I'm just updating this. All right, question. On my way out of town, anything for SPY? No, absolutely not. That absolutely not, Mike. And I say that with confidence. We're talking about being overbought. No reason for weekend risk on an overbought market to put on a bullish trade, and there's no reason to put on a bearish trade until we have a reversal, and then even that reversal is just going to be for a short-term retracement. We're still fully bullish here, daily, weekly, monthly. Oh, Van, yeah, if I miss a question, or maybe Greg answered it, I don't know. Halo short, HALO. No, you can see it was a pro gap down, but you got no setup on the intraday. Right from the open, it ripped. So no, absolutely nothing to do there with Halo. All right, Q stalling. All right, now I just canceled my my buy stop order And I did that not, because I'm going into hope mode, but uh, I want to see maybe if I can get saved with the cues here. Weakness. So I'm just going to let it go up. This, the 260 strike is still far enough away where I'm going to see if it can go up and pivot, and then I'll put my stop over the pivot. Yeah, say, I said we were fully bullish, but, now are we running out of steam? Let's check out some of these sectors on healthcare. Here's XLV, range bound doing nothing. XLI, that's industrials though. Greg, what are your healthcare? Hey, that's IBB Greg mentioned yesterday.
That's different than healthcare.
There's pharmaceuticals, PPH, that's doing nothing. But look at this major support on the weekly. I'm going to have to add that one to my sector list, PPH. The 55 puts, if we go all the way out to June, are nothing. Oh, well, it's spready too, 25 by 75, so nothing to do there. Yeah, you got to be careful trading these ETFs and make sure they're liquid. But otherwise, we use them for our sectors patterns, and then we drill down looking at the individual stocks of interest.
I think you have to be very careful here with longs. And go through sectors, a lot of them, they're up multiple days at or just above resistance. Short term, that is.
Wow, look at that Oxy we were trying to short. That's still a beast. Jesus. I was in that too, the bear call spread. Amazon. Yeah, XBI, but still range bound. GBTC. Yeah, that was a gap down on this ETF. Gap down to the 200, but under 2-3 weeks of consolidation. Look at some of my other stocks. Oh, this IQ. I want to put this as a new toy for us to, to trade. It's an IPO. It's an ADS. So probably Chinese stock or something. But it has nice juice. I'll watch that. Mosey, Gap, and coming in.
Got a 5-minute sell setup on the AMD now at the day's open. And what I'd like, it's got a topping tail there. And of course, I want to see it break below that topping tail's low. Once it does, I'll bring down the stop considerably. VIPS is starting to inch its way lower. And the NBL, that piece of crap energy stock, is lagging. The daily looks fine, but it's not cooperating in the moment.
Wow, that TTD, I can't believe that. Oh, that BMW. Oh, yeah, so we're out of that one now. Wow, that was, I don't know why the premiums were so juicy on this one. That was a nice trade. It wasn't earnings. Maybe there was other pending news, which is what made it do this. Oh, really? Oh, that's interesting, Dan. Let me see what the open interest is. Well, yeah, I'm interested relative to um, relative to other strikes. 260. Yeah, I mean, there's more in the money. Well, let's sure reverse that. Well, I mean, Roku stabilized, but I wouldn't call it getting better. Wow, remember we were considering the 34s? I am sure glad we stayed away from that. Look at that. Oh, we would have been in pain. We would have stopped out. Symantec, back down, middle of the day's range. Okay, so there's nothing to do here. I'm going to start cleaning these out. Redfin, gap down and rally, but it's still garbage. TRI, well, that was a pro gap down. I remember this morning I was saying it's, sloppy. Would come back and look at it at 30 minutes. And I didn't come back and look at it at 30 minutes, but that was a nice pro gap breakdown. Mosey, You know, this was the one I said it was a big gap. Maybe it's coming out of a coma. Drop box, I was saying possibly an iron condor. Yeah, let me check that. DBX. So for next week, 32.50. So that'd be that strike right there. And let's see if we did a 29. Oh, it's actually not bad. To get 50 cents for next week. Doing a $2 wide iron condor, 32.50 here, and 29 to 27, or even 27.50 because they're the same quotes. That's tempting. I'll watch it into the close. Here's my RBS that paid $4.5 billion to settle. Yeah, but it's garbage. I was just giving you that news lesson. IWM, some topping tails on the intraday here, 15-minute at resistance. Can I get some coffee, Greg? I'll be right back.
Coffee? Dad, you drink coffee?
Yeah.
I'm kidding.
Well, you're right. I think I'll have some fresh squeezed orange juice instead.
All right. Market's just, I guess, in test mode here. Qs are up against the day of the high with a bunch of topping tails on the 5-minute, and the NQ futures, since they're 24 hours, are potentially forming out a lower high after the break of a lower low on the 15-minute chart. The S&Ps are hanging up at that new high, but topping tails there. XLK, topping tails is definitely selling going on here. You know, profit taking, whatever. Testing for shorts. Oil trending down on the 15-minute bonds. Took a drop on the 15-minute. But no break of any significance. But I think the Qs are, you know, an aggressive short right here. I'm going to stop probably like above 169.80. So 50 cents or so. Actually, don't even need 50 cents. I got filled at 169.44. And I'm going to put my stop above the highs here, just above 169.70. I'm typing it in here. I'll just give it an extra 2 cents. And it could be a pretty decent trade if it can get below today's low. That's the big question. And NVIDIA on the 15 minutes got a topping tail up into yesterday's close. And, you know, from a bearish point of view, it's good that it couldn't fill the gap if it does roll over here. XLK 5-minute drop down pretty hard. Still a minute and a half to go on that bar. Oil's trying to reverse back up from $71. Overall, everything pretty much neutral here today. The ticks are back and forth between minus 400 and plus 400 or so. Well, I wouldn't call it dull, John. I mean, it might be dull in the moment. It wasn't dull the last few days. You know, I'm not looking at this. Believe me, I'm not looking at this as some kind of like, well, market's going to crater. I mean, that kind of saying kind of pertains to a longer term perspective of things. You know, me shorting the cues, that doesn't mean I'm bearish, you know, from an intermediate, hardly even a short term point of view. It's just that, you know, if you look at the 5 minute chart, it's been up here 3 times from yesterday and today. There's topping tails. So the entry provides a relatively tight stop for something that could, you know, give a good reward to risk.
Hey, John, I don't know if I forget if it was John or somebody else asking about the functionality of a contingent order. Here, I just found it. So that's a little recording I did walking through it on Toss, Thinkorswim. No, Thomas, I've I told you I canceled my order on that. You know, it's against me right now. I'm down 120 bucks on a 3 lot, but and I was just looking at the premiums here. You know, 260 is still, you know, up there right at the gap fill. So I just decided to give it a little bit more room. And then secondly, what I was just looking at right now was if it does get up to 260, instead of, taken my stop, I'm considering rolling it. And so I'm looking at the premiums and they're massive. Like I could roll it to the 260. I'm sorry. Yeah, 265. And I would roll it into a spread, of course. I wouldn't do it naked. But I could do the 265, 270 for next week for $1.16. So I don't know. I'm not quite sure how I'm going to manage it, but no, I'm in it. It's against me. I'm down $120. And I'm glad whoever asked me, I'm glad I kept you out of it. But it's working on negating a bearish gap. Correct. That's exactly right, Dan. It would be up and out. But see, I don't want to do it just going into hope mode. So I got to ask myself a question. Do I want a $5 wide out of the money bear call spread on NVIDIA? So you would ask yourself, is it a compelling new setup? And I would, say no, unless I got a double top on the hourly. I need more data. But if you were asking me to do it right now, I'd say no. No. So I don't know what it's going to do into the close here, but as of now, 1041, it's bullishly negating that gap down. I'm just hoping, intelligent hope, that if the market does roll, it's going to slow down the bullishness of it. But we know things are on their own page all the time. Like said G yesterday, he didn't care, what the market was doing. TTD today, SYMC today on the bearish side. So there's no perfect answer right now. No, but you're right. Yeah, Sosnov just rolls. That's his MO. So I'm inclined, no, not to roll it for the reason I just said, because it's not a new bearish setup, but I will keep it on my list every single day, waiting for that bearish hourly reversal, and then we will sell next Friday's bear call credit spread out of the money. Wow, it's coming up to yesterday's low now. Wow, that's impressive. And just since we're talking about it, another strategy sometimes when you're short a call like this, like I am, if the pattern turns bullish, you can buy stock, or in the money call, of course, and convert it to a bullish position, but it has to be a bullish position. So this is not an example where I can put in a buy stop order at 260 and say, hey, buy me stock to convert my short calls into a covered call, because then I could be buying the dead high at 260. There's no pattern. There's zero pattern to buy this at 260. That's right, the gap fill area. So I'm in a bad small lot trade. I just got a 3 lot.
This is exactly where if sellers were going to show up, or if I thought I wanted to short this, which I don't, because it's the way it's going up on the 5, but it's exactly where I'd be watching it, because if on the 5-minute, Dan, of NVIDIA.
But that looks bullish. Well, let me get rid of the pre-market data now.
I guess Dan's got his mic muted again.
No, I don't.
No? Okay. So on that 5-minute, you see where it's coming up to, that little shelf that it broke out from yesterday. That's where it should stall. If it's
Yeah,
going
see
to,
how my pre-market data mess, gives you a different picture. Yeah, right.
well, it stopped at the first one and then it kept, you see how it pulled back? Look to the left of the first pullback, the one where you got the bottoming tail down to the 20.
Oh, right here.
No, the high of that before it pulled back. Look to the left.
Right, right. It stalled right there.
Right.
Well,
So
a
now
little.
it's coming up to the next shelf, and
Right,
that's where it should stall if it's
right
gonna.
here. So this is truly, I have 5 hours and 15 minutes. I don't want it to go to 260. Can get a dollar to do 260, 257. Well, 257.50 doesn't make sense. Are you talking about a bear call spread? And I still wouldn't do it. I don't want to get anybody into, trades that aren't high probability. And we have no reversal here yet. Only if we got a nasty double top would I say you could do it. But your strikes don't make sense to me, Thomas. It would be a 260, 262.5 or 265. So I'm not following your 257. Oh, Florence, we were talking about the video.
Surprisingly, win is weak today.
Oh shoot! I tightened the stop. I mentioned we made 80% of max profit in 2 days, so I tightened the stop under here, which held by 4 cents. Nice.
Didn't come up to that old high from several months ago, but I mean, it's not a bad reaction, looking at the daily chart, but
And so the midpoint to close right now, win would be 38 cents a share. So that's what I mean. That would still be locking in a guaranteed profit on the back half.
I got stopped out of my queues. Hit a new high on the day.
Wow.
XLK made a new high on the day.
Wow.
I tightened it up. I didn't even, I didn't even risk a whole risk unit, half of. Because the trend, the hourly was there. I was looking to potentially catch the turn after 3 attempts to do it. So no biggie. Be interesting to see if it can continue to go up. But if this is a peekaboo new high and it comes back down under the prior 15-minute bar's low, which is a tail bar, I would look to re-enter. But sometimes, like, I primarily want the trend to turn, but after those 3 tries up there, it was a minimal risk to potentially catch what could have been a really great entry point with a multiple hour pullback. So I'm still in this NBL after, you look at the 5-minute drop and it's like, oh my God, look at how it dropped, and now it's almost back up to the high of the day. But the daily chart, looks to me like something that I'm going to be holding, assuming it holds this high or possibly goes higher. I'll be holding it into tomorrow and turning it into a swing trade. My VIPS is just a grinder. Slowly.
Wow, did you see on the news, Greg, that in Hong Kong it's the most expensive real estate in the world, and they're selling parking spots, not lots, one spot for 660 grand.
I've never been there. Have you? I mean, what's so terrific about it?
Yeah, I've been there twice, once as a kid and once on my Southeast Asian tour. Yeah, it's, a great spot on the water. It's very industrialized, a ton of tall buildings. Traffic's horrible. It's very dense. I don't know how many million people are there. Hong Kong, John, and then you take a ferry over to Kowloon, and that's where Macau or Kowloon. You can go gambling. It's a gambling island, Mecca. Wow, look at the queues go. All right, I'm still holding my breath on this in the video, but I'm going to put my stop over yesterday's high, and then what I can do, just so I don't stop out at the friggin' dead high, I'll just continue to watch it. And if I then get a double top or whatever, then I can reinitiate the position. But even at a higher strike, I can then do the 262.50s that expire today. But, I'm trying to be objective, can't go into hope mode. Maybe this thing rips to, 265. I have no idea. So I need a plan, take my stop, and reassess. I did stop out of a 1 lot earlier, so I only have a 2 lot left. But the gains on, I'm still up on the day, of course. The gains on my other positions are doing great.
Not all nasty gaps follow through.
Absolutely. It didn't work. Yeah. I mean, I love my entry, and, let's go back and look at it.
And that is in my gap under green bar scan, which, they don't all work, but the majority of them work because, you got a solid green bar and prices are gapping below it.
And
so that's pretty bearish.
And it didn't bounce very much. I had 2 topping tails, and I did it under, the low of the second bar, and it made a new low. So I was feeling great, like nailed that one, and it nailed me. But look, I like this reversal so far.
It's an obvious spot for sellers to step up. But
so when I go to the gym here, see, I'm just going to put my stop over this 260.50.
Yeah, Dan, that's called a contingent order.
Correct. And it's contingent on what? Well, in my case, it's contingent upon NVIDIA trading over 260.50. No, it doesn't. Yeah, it sells. No, it buys to close because I'm short. So watch that link that I put in here, and I tell people it's like, yeah, I buy at market, particularly if I'm at the gym. Absolutely, I just take my medicine. Didn't, that's my stop. And pretend you're talking to your trading assistant when you work through that, order module, and you're telling them what to do. Hey, Susie, if NVIDIA trades over yesterday's high, close this out at market. And you just type that in, to your trading platform.
Did you cover that in the updated mastering credit spreads, Dan?
I did not. I forgot.
I think it's a good thing to have in there.
Yeah, I can do it.
I mean, you see these kind of things that you think because we've been doing it so long, we think everybody knows this, and they don't. And order entry that's a pretty good subject, to get the basics down.
Yeah, John, I think you said Fidelity, wherever. Just go to the website. I mean, these, any reputable firm should have great tutorials and videos and help sections. Just go to their help section and or type in the search contingent order, and toss. They all are pretty darn good these days. Okay, cool. All right, well, 11:03, I think I'm gonna head out here since I'm not buying anything right now. Overbought market at 11 o'clock, even though, still look higher, but I have spider puts, I'm in CSX, I'm in Intel, I'm in, a couple of things. So my positions are fine. And I'm holding my breath on the video. Twitter, let's take a look. Well, May 18th. Oh, okay, never mind. That ain't bad. I like this 15-minute. This is a trend change. I have a higher low. This was 100% retracement. Now I have a higher high. So let's see, you're saying 32.5 is too tight for me, Florence. That's just too tight for my liking. And the daily is kind of a mess. I would have to, I'd prefer a, 3150 or 32. And let's see how much you're getting. So 32.30 is 30 cents. I like that one's better. and you're fine on earnings. I mean, you have, it's not bad. You have topping tail, bottoming tail, but like I said, I like the 15-minute, weekly here is shaping up. Yeah, so now it's, yeah, but Dan, if you're talking about a new, I mean, I'm in it, I've been talking about it all morning, but just because I'm in it doesn't mean I'm dragging anybody else into it unless it's a compelling new trade. So, in my opinion, yes, it's a 2-bar reversal, so I like that. Um, so it looks okay, but I would have more confidence if it came in and made an M top. This is the first reversal, but it's still in an uptrend. So it's more aggressive. And so I can't recommend that anybody do that unless you're just, scalping it, 2-minute chart. That's a small M formation on a 2-minute chart. And, I would love this to be a high too.
Hey, Dan,
Yep.
there's a couple of questions I just saw on YouTube, which I had open. Do you have a position on SPY for Monday?
Uh, Me personally, I took my profits, but our advisory, our weekly options trader, is still in it at much greater profit than I have because I was more aggressive. Kind of being a day trader yesterday when we were rolling over in the afternoon or started to roll over, and my intent was to reload at cheaper at better prices. So that's the answer. Me personally, no. The room is, and well, not the room. The weekly options trader has 2 of them on, or maybe 3. One expires today, one Monday, and one next Friday.
Yeah,
So we have
that's something that to make a point on is that of the services, like the room won't necessarily have every trade that is in the advisory or weekly options trader, and the letters may not have certain things that happen in the room. So it's never going to be like whatever we do is everywhere. Anyway,
I know.
Austin said, "Do you think Nvidia will recover past its ATH?"
I don't. Well, I don't know what recover means, and I don't know what ATH means.
Neither do I.
So I can't answer the question. So I need clarification, please.
Yeah.
What does
Yeah.
recover mean?
Well, I guess that means it gap down and recover back to a certain point.
Well, it did. I mean, it's at the gap fill. So
This doesn't say what time it came in, so I just saw it. The other question was, how do you manage gamma risk with your weekly options?
it's gamma risk to us is 100% irrelevant since we're trading our stops, our entries and stops are based upon the chart pattern. So gamma is meaningless to me. Gamma, by definition, is the change of delta. And all that means is it's going against you when the stock's going against you. And hello, McFly, I don't need gamma to tell me that. I see the stock going against me. So it's irrelevant since we manage off the charts.
So Dan, these Greeks, I mean, they, of course, they have relevance. I mean, since we're using charts, maybe not as much so as someone who doesn't use charts. But how did they come up with this gamma and delta and vega and this terminology? I mean, that's probably an hour-long conversation, but how do they come up with explaining what gamma
Right.
is?
So let me give you the Cliff Note version. Option prices are, they come up from supply and demand and a Black-Scholes model, buyers and sellers. And And gamma, I'm sorry, each of the Greeks, there's 5 of them, but I never talk about rho, which is interest rates. Unless you're a long-term hedge fund manager, I don't care about it. And then, so you got the other 4. And then gamma, as I just said, I don't care about change of delta because I can see delta in the chart. So gamma is irrelevant to me. So the other 3 do give us valuable information. They tell us all other things, all other Greeks constant, the delta, the vega, and the theta, you just look on the quote screen and they all provide valuable information. So let me review those. Delta, it's telling me how much my option should go up or down in value for every $1 move of the underlying. So that's valuable information. Theta, it's telling me how much time decay is occurring per day that passes. That's valuable information. Third one, Vega. Are you trading options in a high or low volatility environment? So Vega tells me how much my option should lose or gain value for every 1% move in volatility. Now, do you need to master those to trade options around the charts the way we do? No, you don't. But as you know, we just keep adding layers of information to our education. We're just improving the understanding of option pricing. So, in its simplest form, we find a bullish pattern and we say, hey, we can get paid $500 for predicting a bottom in this pattern for 7 days. And you don't need to know any Greeks. That's all you have to know. That heck yeah, I want $500 for calling a bottom, and XLE and Visa and everything else we do. So you can keep it simple, and we try our best to keep it simple. And I only talk about the necessary components as needed.
So here's a real tough question, Dan. Where did they come up with the term to call these things the Greeks?
I would have to Google that. I don't know. Yeah, Animal House. But they tried. I don't know. You can Google it.
Yeah,
I don't know. But
I'm just curious. I thought maybe you knew. But...
No, I don't. But they try to keep the beginning letter, to make it easy to memorize. So delta is directional, theta is time, and vega's volatility. So that's the first letter is your memory aid.
Pat says it's because it's all Greek to most traders.
That's right. There you go. That's a good enough reason for me. Right. You ever try to speak the Greek language? I have a hard enough time speaking English. Yeah, Black-Scholes is just a model of option pricing of what should be the price of an option. So what should be the price of a NVIDIA call option for 30 days? Well, you plug it into Black-Scholes, which says, well, here's the strike price, here's its implied volatility, here's the time decay. So a theoretical value should be, $4.37 for next week's 262 call or whatever. And then the marketplace will adjust that through supply and demand.
This Vips doesn't want to give it up too quickly, but it spent most of the morning chopping. It broke underneath it, so ideally it'll start going lower a little faster. And Pat informed us then that ATH means all-time high. Eduardo typed in Q&A, is it possible, could we have a breakout failure here in the Qs? Absolutely. Look at your 15-minute chart or whatever, 5, whatever, broke out above the highs and came right back in again. So could have, possibly have, right? So what we need to see is it now come back down further, probably, well, it could go sideways here. Ideally, one Q is looking at, say, 169.40 area, come back down into that. That would be a relatively deep retracement from where it went sideways and then broke out. And then, because, we want the great opportunity to short it intraday, it would go sideways, through lunchtime. And then when we come back, it's there waiting for us to give us money to short it as it goes lower.
All right, Greg, I'm out of here. I'm gonna go exercise. Come on,
Yeah,
video
don't
kid.
your bones ever get tired of that exercise?
Yeah, they do. And then I either take a day off, I do go lighter, or just go for a bike ride instead. But I 100% let my body tell me when it's enough. I never, never force it. So I work out like 5 days a week at the gym and bike ride 7 days a week.
My hero.
Well, I've actually lost more weight even by
That's not
doing that.
good. You're kind of thin to begin with. You don't need to lose any more weight.
I know, I know. I actually asked my dad, who's a retired pediatrician. I said, "Is this all right?" And he says, "Yeah." All right, spiders here. All right, now I have more confidence in the video than I did 10 minutes ago. Because now I have an engulfing of the green bar. I have a lower high from these 3 bars highs. So, there you have it. But
For
I'm
those
not
that are
I'm
in the
not
room
giving
that
anybody a new
started
trade, just making an
that started
observation.
whatever that started the trial late. And I know some are still in here. That was the email I sent out last night for the special to get the weekly options trader free for a year, or you can just sign up month to month. I think that should come up. Yeah. I think I have to bring my stop down on VIPs down above the top of that base, which basically will make it a break even. And maybe it'll start to roll. So those Qs went right down to 169.40 and they're bouncing. So hanging here, going sideways. And the reason we want to see him go sideways is to get away from this morning's price action, meaning that sideways move and the dip down early morning, to get away from that. So the idea is it begins to dissipate the potential strength of that as being support. So this void concept that you always hear me talk about, it's about price movement, moving through time. So anything over time, well, I suppose its strength could build up, say like a topping pattern. That part of the potential bills as a distribution pattern. However, what's underneath it as support starts to become less potent or meaningful as a reference point. And not that it won't stop there, often it will, but when you have a prior swing low, for example, that is immediately next to current prices or close to it, it is much more likely to have some type of a meaningful effect versus, if it happened, well, it depends on the time frame you're looking at. If we're looking at a 5-minute chart. So if you look at a 5-minute chart of the Qs right now, that prior swing low, in addition to today's open, which is at 169.35, it's relatively meaningful now because it happened, this morning. It was a short time ago. But say this goes sideways into 3 o'clock, and as that trading goes by over the next couple of hours and moves away from this point in time. So if you're looking at a 5-minute chart of the Qs, you see the bottoming tail bar there at around 10:30-ish, something like that. That isn't going to mean a whole heck of a lot as support. So some of this comes down to common sense, but you have to put a thought process behind it so that it relates in the future when you look at other chart patterns. So what I try to teach, right? Not try, I do, is to look at charts in multiple time frames and understand what's happening there, so you can, use that in any tradable instrument, and then, it's not about just saying, hey, that's a head and shoulders, or that's some candlestick pattern. It's about understanding price movement and historically how the reactions to certain things and how the same looking pattern can react differently under other scenarios. So the bounce from that bottoming tail bar right now, it was pretty much immediately. It was immediate. It was the first time it was being tested on a pullback. So later on today, assuming that market doesn't push up back up to new all-time highs, stays relatively close to this area. And when I say what would that be, I would like to see it stay ideally below 169.75-ish and kind of go sideways here for a while. And then we see if it rolls over. Now, rolling over at this point would not really harm the daily time frame and what's happened over the last few days. However, the 60-minute chart would then be giving us a breakout failure, and prices could be opened to pulling into, say, 168, 167 area. There's some minor support there around 167 on the Qs, where that could set up that higher low on the daily time frame. I'm not sure what your question, that same looking pattern can result or mean different scenarios. Is one like you to explain on some time because others stop? You mean others stop out? Put the patterns in context. Oh, yes. And so, and not only put the patterns in context in the time frame you're looking at, but in multiple time frames. No, of course not. Even those that I taught and went into the business of teaching grasp it on the depth, because I taught it to them, but it's a lot to absorb. Even though they've been doing it for a number of years, they teach the foundational stuff, or I don't know how to say, the more surface type of information. I mean, I wrestled with this stuff for years before I put it on paper. And then even when I put it on paper, which was a monumental task. And I remember when I first started to put this together into a course material, I was printing out, maybe hundreds of charts and writing notes on them. And I had them all over my floor. And then trying to organize them and put it together. It was a huge task. And then from there, once I got it together and presented it, it was like, you as a presenter, you of course learn how to explain things in a much clearer way, which is helpful, as people start asking questions, and that kind of draws the information out of you on another level. So that was great. And then revising the material over the years to make it clearer. And people, they can come to the website and they could look at master trader strategies and say, oh, that sounds all pretty interesting and yada yada, and they cannot imagine the depth of information and what they learn until they get into it. No, it wasn't TPM. TPM was a, back in 1996, 5, it was a good course at in that time. I mean, even on some level, it's an okay course today, but it's pretty rudimentary and basic stuff, and how it uses moving averages and even talks about trend lines. It's a bit subjective. You can go to the Master Trader website and read the article that I wrote, Pristine Method, its origin and end, and you'll get an insight about that. Anyway, as time went on, I said, this is not the end all of what people need to know. And then I wrote TPM2. And that was a huge improvement. But of course, over the years of teaching and, what I put together in Master Trader Technical Strategies, adding psychology and, making it into one course was like amazing. What a joke. What a TPT3. They only can teach what I taught them, right? I sold them those old PowerPoint files and old recordings. They're my students. The story I told yesterday about doing a class for traders that couldn't tell the difference between a wide range igniting bar and ending bar, that was them. They're just traders, some decent ones that just wanted to profit from the education business, but they just couldn't put the material together. All right, so that NVIDIA's kind of coming in, and my AMD, which got dragged up with NVIDIA, of course, is coming back down to earth. No, they don't, Thomas. They paid me for what I gave them. And then I set out to make it 100 times better. You can't, I don't know, take other people's work and make believe it's yours. It's disingenuous, but businesses do that. The one that took was well, yeah. I mean, it's a business. They want to. What do you want? You could relate it to walking into a bakery. The baker makes what they make well, right? And you walk in there and say, "Oh, I'd like a certain kind of cake," and they'll make it for you. Doesn't, maybe they make it well, maybe they don't. Well, Thomas, I don't know if you know the history, but Dan, he is like super intelligent guy. I mean, of course there's people out there as smart as Dan, but I mean, he's like a sponge. I don't know what his IQ is, but it must be up there. And so, I'm trying to remember what year it was. Maybe it was like 1990, and he'd probably remember, of course. Maybe 1997. We had the office in White Plains, and Dan had found our newsletter, how to be on a website at that time. And not only is Dan like super intelligent, in a certain aspect, he's like a free spirit. Meaning, he's like, I'd like to learn from you guys and I'll come and work for you. He was in Florida. And we said, well, we're in New York. He says, no problem. I'll fly up there. I'll bring my car. I'll do whatever. I'll get an apartment. And we're like, okay. And he came. He came into the office, and I think he knew some stuff about options, and he sat down with us, and I started explaining to him what I did and trading. And, he sat next to me for, I don't know how many months. And he was like, okay, I got it. And he wrote an option course way back when. And then he started being an instructor. He was running what we call the advanced stock and derivatives trading room. And people loved him because he's like an idea generating machine if you can keep up with him. But Dan is a lawyer. He's an accountant. He's a boat captain. He's a pilot. Yeah, he's been traveled all over the world. When we opened up office in Irvine, California, right? Dan was in New York. We say, Dan, what do you think about going to Irvine, California and living there and running the office? No problem. Off he went. Thomas in YouTube there, chartered market technician. All right. What is that chartered market technician? That is a group that convinces each other, in my opinion, about the need for complexity in technical analysis. So when you join that group, it's like going to a college in a sense, and you have to write a thesis about something. And I attended one of those meetings, and wow, what these guys are looking at to convince each other what is needed to determine the direction of prices. I'm telling you, their emblem should be the Holy Grail. It's kind of crazy because they're smart guys, of course. So the things that they can come up with to try and show each other that this is a way to determine whether prices are going up, down, or sideways and where they're going to turn is unbelievable. Do I go to money show conventions? I was at not too many money show conventions where I've been to a few, Dan, but I was at the original Traders Expo. We had the booth there. And if you go to the Master Trader website under about, maybe it says about me or about whatever, you'll see me there in 1999, looking much younger with more hair at our booth. And when you look at that picture, you will realize where the name T3 came from. even before there ever was a T3. So I've gone to many traders expos, and I did many live trading challenges there, did many presentations, and they kind of lost their, I don't know what they were. I mean, back in 1999, it was big, 2000 big, 2001, day trading was new. So there were a lot of people there. Today, it's become a trading platform show, and broker dealers, not too many educators anymore. There are a few, but most of the educators that were there when I went there, they're either out of business, or the ones that are still around, they just stopped going. I mean, when I was going there, to set up, and I had like the biggest booth there, probably next to, well, eventually, the Fidelities showed up, the first ones. They didn't want no part of it. Just the day trading was a scam, and now that's all they promote. But when I was going there, I mean, it would cost 50,000 plus to set up that booth, travel, bring people there. And so it was a big expense, and eventually it just didn't seem worth it anymore. And I guess others came to that conclusion as well. Yeah, it's kind of a dead event. They invited me to come to the New York one in February, and I was just like, I hate New York in February. I used to live in New York most of my life. I hate the winter. It used to be 2 floors at in New York at the Marriott, but they're much smaller now. More virtual shows, the internet. Anyway, that was an idea that 2 guys came up with that had a day traders group in California. I think they were policemen, state troopers or something. Tim Boyquin and Jim something or other. That was their idea. Thank you, John. And they created the first Traders Expo that we went to. And I can a lot of history stories, having been in this business a long time. So we were like, I guess, whatever, I don't know if they had it back then, one of the premier sponsors at the show, or the premier sponsor at the show. And there was a fella there, first trading platform, maybe not the first. His name, what was his name? Guy from Ireland. And he had the vision of a high-tech day trading platform, which he developed. And he went to these guys that had one of the original day trading shops. And what the hell were they called? Block Brothers, I think. It was Block Trading. And he went to them and he said, hey, have your guys bang the keys on this thing. It was called Cyber Trader. I think it was called Cyber Trader. And he eventually cut them out of the deal. They were supposed to get a percentage ownership in the deal. But he winds up selling the platform to Schwab for $500 million in stock. And I don't even think he had a restriction on selling the stock. And I mean, he probably had some partners, but the Block guys, their high day in the business was their picture on some magazine, the 2 of them standing in front of their Ferraris, maybe it was Fortune or Money Magazine, I don't know what. They were cooked somewhat after that. Yeah, I don't even think they use that platform anymore. D-Trade, or my relationship with Oliver. I would say it's non-existent, D-Trade. There's a long history there. The high-low ticker. Yeah. I mean, it was a decent platform in its day. And then there was a group called Cornerstone out of Texas. Austin. I think they were in Austin. And they created a platform called Great Trade, Great 8 Trade. I don't know, Great 8, something like this. Anyway, these two traders from this trading group, another office traders, they were the first ones to create. Yeah, Cyber was in Austin. And I think these guys were in Austin too. They created the first automated trail stopping technology. So their style was to just read pre-market what was strong, and they would have, we went to visit them. They would have on 100, 200 positions at, and they hired programmers to say, hey, every time this thing moves up $1, raise the stop $0.50. And that eventually became, they sold that platform to Instanet, I think, for $20 million. That was after the cyber deal. And that platform went in the can too. We don't see it around. But a lot of great technology that you guys use today came from those first day trading beginnings. SOS bandits and day trading rooms and all of that. You were there at the beginning, D-Trade? Where were you there at which beginning? The beginning is a long time ago. I'm talking to someone, guys, you guys in the room, I'm talking to someone on YouTube. Daytech. Okay. Daytech, like Broadway trading. The Watcher. My VIPs keeps grinding lower. The Qs have come in not quite a bit, a decent amount. All right, so this VIPs gives me no reason to cover it yet. I'd like to see it go a little climo, but in the beginning for the Greeks was, yeah, I suppose so. I think this noble energy that I have is gonna, unless it falls apart, that's gonna turn into a hold overnight. Yeah, I remember the name Daytech as being one of the first day trading firms. Yeah, you had to have the pristine day trader. Yeah, that's, guys, those of you who are in the room that aren't familiar with the old history, when we first started sending out what was called the pristine day trader, it was a fax service that we advertised in the IBD newspaper and on a monochrome delayed quote platform, which I think what eSignal eventually evolved it into. And there were like these little banner ads on the bottom of this monochrome thing. And we put an ad there, trade like a pro. And we should have coined that and copyrighted it or whatever you do with a term like that. A lot of people started using that, trade like a pro. And so this newsletter that we sent out was actually sent out by a fax. And we had a room full of computers and fax machines sending out faxes all night to people. So my first customer was my broker, my retail broker, and he was at Prudential. He eventually moved to Smith Barney, and then we started, day trading firms were subscribing to it. So they'd have one subscriber for whatever, $90 or whatever it was a month, and they'd take it over to the copy machine and print out 100 or 200 of them and send it out. But wind up being pretty good advertising. All right, so I'm going to be holding these positions. I still have the VIPs and I've got NBL and I'm short AMD. We'll see if this falls apart. Definitely was dragged around by NVIDIA. Also, I'm going to go to the gym myself, eat a little something, and be back, and we'll see where these things are at. Later. All right, guys. Have a good one. See you later, YouTubers.